Hi, Janet. Thanks so much for your question about investing for minors, whether they're your children or grandchildren. And I'll answer it really generically, I guess, so other people can benefit from this answer. But it's a common question where either parents want to invest some money on behalf of their kids, or in your situation, grandparents on behalf of their grandchildren. It's a really easy thing to do and really cost-effective thing to do. I will share the exact way that I have done it, and I have advised my clients to do it. Of course, there's different share providers, and there's also different ETF options as well. But I'll just share what I think is the best approach. So the first thing you need to do is set up a share trading account under a minor's name. Now, you can't have a share trading account under a minor's name, so you need to be over 18. So you then need to act as the trustee of what essentially is an informal trust. An informal trust because there's no trust deed or anything like that. I tend to use or have used or have only used CommSec. CommSec is an online share trading platform owned by the Commonwealth Bank, and they allow you to set up a account in a minor's trust account. That's what I think what it's called. So if you just Google CommSec minor's trust account, you'll be able to see the instructions in order to do that. It'll ask you to quote a tax file number, a TFN. For anyone that's listening to this video, if you're investing a substantial amount, you might consider going and getting a TFN for the minor, whether that's your child or grandchild. Almost always, we're not investing huge amounts, and so the amount of dividend income that the investments will produce are negligible. In that regard, just easier to quote your own tax file number when you set up that account. Okay, so now you've set up an account, a trust account for your child or grandchild. It's now about investing the money. Really easy. I select a diversified ETF that gives you broad-based exposure to the Australian market, international markets, and emerging markets. The code for that ETF is DHHF. It's a BetaShares ETF. As I said, gives you that exposure. So just buy shares in DHHF every time you want to make obviously that initial investment, and then progressively invest over time. When the beneficiary, the child, reaches age 18, what you can do then is ask them to set up a CommSec account in their name, and you can do an off-market transfer of those ETFs into their account. That won't trigger any capital gains tax because they've always been the beneficial owner of those shares. And that way they can then deal with the taxation consequences and managing those investments in the long run. So really simple thing to do, just to summarise: CommSec account, minor's trust name, invest in DHHF. Anyway, I hope that's useful, and thanks so much for your question. Cheers.